right? What is the balance sheet equation? Assets is equal to liabilities plus owner's equity. We talk about the assets, we talk about the liabilities, and now it's time to discuss owner's equity or just equity. We also call that owner's equity means who are the owners? Shareholders, right? So we also call that shareholders equity or the insider's claim. So this is the business worth. What is its insider claim, which means owner's claim? We call this owner's equity. What is outsider claim, which is the liabilities or the creditors or the loan providers who provide the money to the business. So it includes number one, common stock. Common stock, the amount represents at the par value of the shares issued by the issued to stockholders. What do we mean by par? Company issued a stock for $10, that is called par, right? When the which is the face value of the stock, but after sometimes its value goes up, so we will include it into retained earnings or blah blah, the other stuff. So right now just understand that common stock are always on par, and additional paid up capital is the amount of cash received initial sales of the company's stock in excess of par, right? You issued a $10 stock for $50 because the reputation of the company and company future as well, so you write 10 here. If you issued one stock and 40 here, this is the excess of the par. Okay, what about retained earnings? Retained earnings is the portion of profit that you did not share with your shareholders or stockholders and you reinvested into your business. We call this retained earnings. Retained, right? Earnings that you earned but you did not share. So, or for example, you earned 1,000 and you retained 600, it means 400 you distributed. Right? Treasury stock. What do we mean by treasury stock? Treasury stock is, it's not some kind of treasure or something. Treasury stock means that you repurchase your own assets, own stocks. And the last one is accumulated other comprehensive income or loss. For example, items of gain or loss that are allowed by the FASB to bypass the income statement and be recorded directly into stockholders' equity, which is financial accounting standard board. So other accumulated income or other comprehensive income is that, for example, if the company provide loan to others and receive interest, so that is interest income is other comprehensive income. If company receives the dividends from the shares that it purchased as a long-term investments and it receives the share, and that income dividend is other comprehensive income. And why we are separating this one? Because there are the other incomes, right? So for example, you are Gap. For example, Gap is for fashion company, right? So in order to see that how much it earned from its own business operation rather than the other's business of the other part. So you are established as a fashion brand and you will sell the clothings. How much you actually earned or made profit from fashion or clothing industries, right? So you segregate the income. Okay, this is the partial statement of Gap and it's the equity side. So equity side, total liabilities are this one, and equity side include common stock, additional paid in capital, retained earnings, accumulated income, treasury stock, and total equity as well, right? And here is the addition of total liabilities and stockholders equity, which means 1 plus 2, which is total liabilities, which include current and long term, and here is total equity. So this is exactly equal to the assets. If you go back and see the amounts of 29 January 2011 assets, which is 7066, because we follow the equation assets equal to liabilities plus owner's equity, right? If assets are 7422, then the addition of this one also 7422. How? 4667 plus 2755. Okay, so up till now we have discussed our three financial statements. Number one, we discussed the income statement. Number two, we discussed statement of the retained earnings. Number three, we talk about the balance sheet, and number four, we will talk about statement of cash flow, right? So let's talk about that. So statement of cash flow reports three types of activities. Number one, operating, investing, and financing. So operating means how much cash is coming and going out from your business through operations. So cash flows from selling goods and providing services to customers, which means how much cash is coming, which is inflow, and how much going out, which is outflow from your business operation. You purchase raw material, you convert it, and when you convert it, you have to pay rent, you have to pay salaries, right? And then you sell to the customers, you receive sale revenue. This all belongs to operating cash flows. Investing cash flows means that you invest your money in the form of assets. How much you purchase the assets, which means whose value whose use is for more than 1 year. You purchase equipment, you purchase air conditions, you purchase the furniture, right? All those, or you purchase plant, right? We call this investments. Financing means financial cash flow means, and also, sorry to cut, investing also includes cash inflow as well. How? Because you sold your old asset, old furniture you sell, you receive some money, that is cash inflow, but that is from investments, that is not from your business operation, because selling your furniture is not your office furniture, is not your business operation. Okay, number third is financing, which is all the fund related activities. For example, borrowing or repayment of the borrowed fund. You applied for loan, that is the financing activity. You paid the interest on the borrowed fund, that is financing activities. And also the equity transaction, like treasury stock, you repurchase your company stock, or issuing new stock, or paying the dividend, it's your financing activity, right?